Hey, welcome back. A key measure of inflation that the Fed watches just came in at a 3-year low. I'll have an update for you guys regarding that, which is the Consumer Price Index, or the CPI, that was just announced on Wednesday. We'll also have an update regarding mortgage rates and also a lot of other changes right now in the US housing market. So let's go ahead and dive right in. This is according to investing.com on their economic calendar. So here's what was announced today, which is core CPI. Core CPI is a measure of inflation that consumers pay, which actually strips out volatile energy and gas prices. So that came at a gain of 0.2%, below the expectations for a gain of 0.3%, and also below the previous reading, which was for April. Also on a year-over-year basis, the gauge there increased by 3.4%, also below the forecast at 3.5%. On top of that, below the previous month's reading as well. Now here's a look at their CPI on a month-to-month basis. Again, this excludes volatile and food energy costs. So looking at the past 1 year, a gain of 0.2% is actually the lowest reading we've had going back to the November report last year. However, looking at the year-over-year change, a gain of 3.4%. Let me just look at the past 5 years, which is right there. A gain of 3.4%. We haven't seen a reading that low since the report that was announced on May 12th in 2021. Clearly, inflation has been winding down very, very slowly ever since really the first part of 2023. A step in the right direction. So because of this, basically a great inflation report, the 10-year Treasury note fell. When I woke up this morning, the Treasury note, this is the 10-year Treasury note, decreased by about 11 basis points. And then it decreased even further, down by 15 basis points. And now it's down by 8.5 basis points. And this is about 2 p.m. Pacific Standard Time. And because the 10-year decrease, look at the rates today. This is according to Investopedia.com. So as of June 12th, the average 30-year fixed rate is at 6.99%. Also looking at the Mortgage News Daily, we're at 6.98%, a big decrease down by 18 basis points compared to Tuesday's levels. Also jumbo at 7.25%. FHA and VA loans is at around 6.45%. Now going back to this 30-year fix at just under 7%, that's actually a 2.5-month low, which you guys can see right here. It has been falling, or it did fall today to 6.98%. We did have a couple of days we were at 6.99%, but at 6.98%, this is the lowest rates we've had going back to May 28th this year. What's also interesting as well, looking at the 1-year chart, of course, we had the big run up in rates that we saw in September and October last year, but at 6.98%, this is more or less on par with last year's levels at 6.94%, a small increase of 4 basis points compared to 12 months ago. Let's now look at the probabilities for future rate cuts by the Fed. Because remember, late last year, early this year, everyone was talking about how the Fed was going to cut rates 3 times in 2024, starting in March. And here we are in June 12th, and the Fed just announced today they're going to keep the federal funds rate flat, unchanged compared to the previous meeting. So we basically had 8 consecutive meetings in which the Fed has not done anything to the federal funds rate. Now, of course, the Fed does not control mortgage rates, but it does have an indirect relationship or an influence on mortgage rates. So when the Fed decreases the federal funds rate, in general, that causes mortgage rates to decrease. So I want to touch on that because we have this higher for longer environment, which it appears we're going to have higher rates or higher mortgage rates for the near term, which in my opinion will likely impact home sales in the coming months. And we're already at very low levels, which I'll share with you guys here in a little bit. Anyways, this is CME's Fed Watch tool. Just Google that. The next meeting by the Fed is in 48 days, which is scheduled for July 31st this year. So there is a 91.7% probability we're going to be at the same rates we have today. And that's in the range of 5.25% to 5.5%. Then the next meeting in September, this is a pretty big change here. So they're forecasting here by a 57% probability, they're going to cut rates by 25 basis points. Then, actually, I should look at this. The day before that, at 56.7%. 1 day ago, on June 11th, that probability was at 46.8%, and also a 47% chance we're going to be at the same rates. So the likelihood of a Fed rate cut in September just got bumped closer because of this, basically a fantastic inflation report from the CPI. In any case, their meeting after September is scheduled for November 7th, and basically a 51% probability we're going to be at the same rates in September at 5.25%, so unchanged. Then on December 18th, the last meeting, a 43.5% chance they're going to decrease rates once again by 25 basis points to 5%. So the street is calling for 2 rate cuts this year, but this is not what the Federal Reserve Chairman Jerome Powell had to say today, because, and also this forecast from the Fed. Coming directly from the Fed, of course, it's going to depend on incoming data, but the Fed said themselves we're only going to see 1 rate cut this year, whereas in their previous meetings, they were calling for 2 to 3 rate cuts. So anyways, because we're having this higher for longer interest rate environment, this is going to impact home sales, in my personal opinion. Now, speaking of home sales, here's a look at home sales according to investing.com. They basically pull sales numbers from the National Association of Realtors. So for, what was this? This was posted on May 22nd for April's numbers. So the reading for April, that was a seasonally adjusted and also an annualized rate, came in at 4.14 million home sales. So basically taking the sales pace in April, doing a seasonal adjustment, multiply this by 12 to get an annualized rate, we'd be at 4.14 million existing home sales, which means that at the current sales pace for April, if you basically extrapolate that for the next 12 months, we would be at 4.14 million. That's more or less in line with what we saw last year. And last year was a 28-year low, the lowest level of sales we've had going back to 1995. So I say, we don't have a housing crash for home prices. We have record high home prices, but we're seeing a crash in home sales, to say the least, and albeit at best, very low level of sales on a national level. They also have a chart below here. Let's look at the past 5 years. So sales have been decreasing pretty significantly ever since really the first part of 2022. Now, going back to the 1970s, you can see the run up in sales in 2005. Look at that. The annualized pace, 7.25 million. Now it's only 4.14 million. So sales basically have been falling off the map, to say the least. In fact, look at the past 5 years at 4.14 million. This is not too far off the lows we had back in June of 2020, which is really more impacted by COVID lockdowns than anything else. So that was the existing home sales. Let's have a look at new home sales according to HUD. And this is according to our good Uncle Fred over the past 5 years. So the current sales pace for April, there was 634,000 brand new home sales. This could be a dirt lot, a house under construction, or a completed house. On a national level, we're at 634,000. This is above the trough, which is back in July at 519,000. But at 634,000, this is well below the peak that was set back in October of 2020 at over 1 million units sold. Also at 634,000, this is below pre-COVID levels, when we should have over 700 home sales, or I should say over 690 home sales each and every month. There's also some other things happening on Thursday that could impact rates as well. So looking at our economic calendar again, for Thursday, PPI is going to be announced as well. This is prices that producers pay. So the CPI is what consumers pay. The PPI is regarding producer inflation. So that is going to be announced on or about 5:30 a.m. Pacific Standard Time, which is 1 hour after I post this video, which I'm making on Wednesday. We'll also have initial jobless claims and also continuing jobless claims as well. Those figures are announced each and every week. But depending on PPI numbers, that will likely impact rates greatly on Thursday as well. On Friday, it's really kind of a nothing burger there. Not a lot of things that could impact rates. But follow closely here regarding jobless claims and also PPI numbers on Thursday, because there's probably going to be some volatility on Thursday and tomorrow. And by the way, I'm making today's video in my dining room here. My kids made this artwork, I don't know, about a couple months ago. It's basically finger painting. Anyways, that's why we're in a different area today. Anyways, I'm going to make my videos this week in this location. So hope you guys can hear me all right. Anyways, I want to share this with you guys as well. This is something I talk about each and every week regarding how many people are searching for homes for sale on Google. A loosely indication of future closed home sales in the coming months. So the index right now is at 71. 1 year ago, we're at 92. This basically means we have approximately 23% fewer searches on Google for homes for sale right now compared to 1 year ago. On top of that, this was also announced today, which is on June 12th. This is from the MBA. They basically look at application numbers on a weekly basis and how that compares to years past. And this this survey covers about 75% of all application numbers. In any case, overall, applications increased by a whopping 15.6% compared to the previous week. So the refi index increased a whopping 28% compared to the previous week and was up by 28% from 1 year ago. Now, one thing regarding this week over week change here is that this figure is not seasonally adjusted. So coming off the Memorial Day holiday, this could be one reason why we're seeing a surge of application numbers for refis. But also for this week ended June 7th, rates did come down slightly. So also can have some influence as well. What I'm more focused on though is this right here, the seasonally adjusted purchase index, which is a measure of the amount of people submitting mortgage applications to buy houses. That increased by 9% compared to 1 week ago, and also is down 12% from 12 months ago. Also, according to the MBA's Senior Vice President and Chief Economist, he stated the following: on a seasonally adjusted basis and compared to the holiday adjusted level from the prior week, this is that seasonal adjustment I've been talking about, purchase activity also increased. Multiple data sources are now indicating that home inventory levels, while still historically low, are up significantly from last year at this time. We're seeing Florida up by more than 50%, but also on a national level, we have approximately 30 to 35% more existing houses for sale right now compared to 1 year ago. Now, this is good news for many prospective home buyers who have been frustrated by the lack of houses on the market. But I'll add that it's great to see that we have a significant increase of inventory levels, which is a good sign, because if we have inventory going straight down, we just basically have bidding wars, right? So because inventory is up by about 35%, that's good news because we want to see more options if you're looking to buy a house. The downside, though, of course, is that we have still 7% mortgage rates and, of course, all-time record highs for home prices. So we're not having a triple whammy that home buyers are facing. We basically have this kind of double whammy right now: high home prices, elevated rates, but we have more inventory levels. On top of that, we're also seeing a lot of price reductions as well, according to Redfin. Now, speaking of that, here is Redfin's data regarding price drops. According to them, the share price drops at 6.5% for the 4 weeks ended June 9th this year. This is by far a 3-year high for the same time frame. Also, we're very, very close to the peak that was set back in, October of 2022 at 6.7%. Now we're just shy of that at 6.5%. Also, according to altusresearch.com, the share price drops, for whatever reason, is quite a bit higher compared to Redfin. Right now, we're at 36%. This is at least a 5-year high because at 35%, this is way higher compared to pre-pandemic levels back in the same week of 2019 at 32%. Also, regarding inventory levels on a national level, there's approximately 611,000 houses for sale. This is a 3-year high. Still lower than 2020 this time though, and 2019. Now, every market's different, right? Florida, let's look at inventory levels in Florida. So for the week ended June 7th, there's approximately 79,603 existing houses for sale. This is a far higher compared to 2023, 22, 21, and 2020. It is more or less on par with the same week of 2019. In regards to Texas, for the state as a whole, inventory level has been absolutely skyrocketing, very reminiscent of 2022. Right now, there's approximately 102,000 existing houses for sale in Texas, at least a 5-year high. Look at the same week of 2019, approximately 94,000. So inventory absolutely skyrocketing in Texas. Let's look at Arizona. This, by the way, is according to altusresearch.com. Arizona, they have approximately 19,000 houses for sale, higher than last year, 2022, 21, and also higher than 2020. It's still well below pre-pandemic levels though, at around 27,000. Let's look at California. California is much, much different. Look at that. So there's approximately 39,000 houses for sale, higher than last year at 28,000, but a little bit higher compared to 2022 at 35,000, higher than 21, but not as high as 2020 and not nearly as high as 2019, when at that time there was 65,000 houses for sale. Now there's only 39,000. That graph in California is basically night and day difference compared to Texas, where inventory has been actually exploding ever since 2022. So I'd love to hear from you guys regarding today's video. My thoughts regarding this inflation report is that it's a step in the right direction, but the Fed keeping the federal funds rate at 5.5% for the 8th consecutive time is telling me we're going to have this higher for longer interest rate environment. And time will tell if the Fed will actually start decreasing rates in September. But based on the data we have today, that is what it's telling us. But please let me comment below with your thoughts regarding today's video. In my opinion, all this is going to impact home sales more than anything. And we already are at very low levels. So hope you guys got a lot of value of today's video. Of course, if you did, please hit the like button. I greatly appreciate that. And of course, I appreciate you. Hope you guys have an awesome day. I look forward to seeing you on the next video.